Here's the ultimate guide to VOO or investing in the S&P 500 for beginners. VOO is a great ETF if you want to simply track the S&P 500 index. And it happens to be the most common landing spot for beginner or even experienced level index fund investors. As someone who happens to be a VOO investor myself, I own over $76,000 in this one ETF if you combine both my Roth IRA and my taxable brokerage account, where I have over 137 shares and just under $17,000 in total gains from this one ETF. Now, for some background knowledge, VOO is an exchange traded fund, short for an ETF, offered by Vanguard. VOO invests in stocks in the S&P 500 index, where this index represents 500 of the largest US companies that best represent the US economy. VOO is arguably one of the safer places to invest your money for the long term compared to lots of other things, since you have 500 high-quality, large-cap companies from basically every sector of the stock market, so you have the benefit of diversification and companies that have long histories of great growth and insane performance. In addition, your investment will hopefully grow and compound for some insane profit well into the future from VOO's amazing performance of over 13% annually over the last decade and over 15% over the last 5 years. And while you wait for VOO to do its thing, you can collect passive income in the form of dividends, because VOO does pay a pretty healthy dividend yield of around 1.2%, and it even has some good dividend growth as well, so your dividend payments just get way bigger and bigger each and every single year. So by the time retirement does come around, you can live off of capital appreciation plus some dividends as well. Now, I know what you're thinking, Marcos, this all sounds great and all, but how do I even start investing? What do I do? What do I look up? What's some relevant information? And I have this all for you in this one ultimate guide in this video. Before we get started, I'm going to be providing an ultimate guide to investing in VOO as well as other S&P 500 funds as well, because there's so many ETFs that can replace VOO just depending on your own preference. So the ones on your screen are S&P 500 ETFs and even mutual funds that are VOO alternatives. So if you prefer other S&P 500 funds, or if VOO isn't available in your own country, then you can pick any of these funds and you're welcome to follow along during this whole video. With all that out of the way, here's today's agenda with some of the most frequently asked questions about VOO that I'll be answering throughout this whole entire video. Personally, I think that you can go all in on VOO as a one ETF portfolio or 100% of your portfolio. VOO has all the green flags for this type of strategy, like diversification, a history of long and stable returns, a low expense ratio, and Seeking Alpha even has a near perfect score for this type of ETF for its ETF grade on many different categories. So long story short, yes, you can go all in on VOO. Funny question, but VOO being a Vanguard product does mean that it comes with some sort of hype or clout in the stock market, since Vanguard is one of the most popular and most respected investment management companies in the entire world. And over $1.3 trillion in assets under management goes to show how much people love and invest in this ETF for their retirement. VOO is also the most talked about S&P 500 fund out there in the internet, from places like YouTube, Reddit, X, TikTok, Instagram, and you name it, so many places. People just love to talk about this fund. Investing is definitely not a popularity contest, because I do think that there's other funds that can easily replace VOO. Basically, what I just showed earlier just depends on your own preference and just your own due diligence if you like VOO or not. Now, this is a great question, but I believe that the investor who should own VOO is an investor who wants diversification, broad market exposure, prefers US companies over international companies, and a set it and forget it one and done investment. Then VOO could be a perfect investment for you and all your needs. On a side note, if you do have a higher risk tolerance, then this can be a suitable investment for you as well. Even Vanguard themselves rates this ETF a 4 out of 5 on their risk scale, where usually higher risk does mean higher reward potential in terms of returns in the future. Then if you do want that, then go for it. you'll most likely get a way higher return with VOO than bonds, a savings account, or even if you're a day trader that lost their entire life savings. Lastly, if you're the type of investor that has a 2, 3, maybe even a 4 ETF portfolio, where the broad market or foundational category is your preferred choice for growth, diversification, and peace of mind, VOO could be for you as well. Well, that's an easy answer. Preferably in a Roth IRA or in some sort of tax advantage account. Examples are all on your screen. But a Roth IRA is going to be the most popular choice for investors based out of the USA. So why even have a Roth IRA? Well, a Roth IRA is an individual retirement account that offers tax-free growth and even tax-free withdrawals in retirement. Roth IRA rules dictate that as long as you've owned your account for 5 years and you're age 59 and a half or older, you can safely withdraw your money when you want to and you won't owe any federal taxes. In simple, plain English, VOO pays a dividend. Yes, it might be small, but those dividends are taxed like literally everything. Dividends are not free. Dividends are taxed at a qualified tax rate anywhere from 0% to 15 or even 20%. Taxes overall decrease your overall return. Let's say I sell VOO in the future for a realized capital gain, then take my returns for example and my gains, then I do have to pay capital gains tax on those gains, which is not ideal. So if you want to pay no taxes and have the best possible return in the long run, then you need to have VOO in at least a tax advantage account. Most people, in my opinion, have a Roth IRA or some sort of equivalent, a 401k or some sort of equivalent of that, as well as a taxable brokerage account, so they have 3 different accounts for their portfolio money. Totally unbiased, even though I have VOO, which is a Vanguard product, and I also have Vanguard as my investing brokerage. But any of these investing apps and brokerages on your screen will do. I've actually used some of these investing apps in some way, shape, or form. So I've had some hands-on experience and some screen time with all these investing apps, and they're great for beginners or even experienced level investors. Always. Okay, seriously, the best method to invest in VOO if you're a long-term investor, which means that you have a time horizon of 5 years all the way to 40 plus years, is to dollar cost average or DCA. Warren Buffett, a billionaire investor, even recommends to dollar cost average as a strategy for the everyday investor. Dollar cost averaging is a passive investing strategy of buying an investment on a regular basis such as daily, weekly, bi-weekly, or even monthly. And you buy an investment regardless of the stock or ETF price, so you buy it if it goes up and even if it goes down. Plus, you're really not going to see any life-changing returns in VOO until your later investing years anyways. I personally follow this strategy of investing in VOO with dollar cost averaging, where I buy VOO every single week no matter what happens. If we're at all-time highs, if we're in a recession, I'm always buying VOO and I don't care what happens in the stock market. Now, if you guys want to see exactly when I buy VOO on a weekly basis, you can download the Blossom app, which is a free investing app using the link in the description of this video. Blossom is my favorite investing app because it allows you to see my entire ETF portfolio, exactly when I'm buying my ETFs. Like I just bought VOO this past week. I think it was like $1,300 I bought. You can see everything about my ETF investing journey, as well as you can give me a follow on Blossom, and I will give you a free follow back, and you can ask me any questions on Blossom, and I will respond back to them as fast as I can. Another great method to invest in VOO is to lump sum invest, which means you take all or a large portion of your investable cash and invest it all at once at one time. Either DCA or a lump sum invest really does depend on your own preference and financial situation, but both are amazing ways to go about purchasing your first shares of VOO. Now, you should only sell VOO if your investment strategy has changed. If you decide to shift your investment focus to a more aggressive strategy with a higher risk tolerance, you might consider selling VOO and allocating funds to different asset classes like growth ETFs, for example. Or if VOO is too unstable and volatile for your liking, then you could consider something like a dividend ETF, high yield savings accounts, or even bonds, for example. On another note, if you're already in retirement, whether that's age 59 and a half for tax advantage accounts, or even in your early 50s, 40s, or even your 30s for some of you lucky folks, then maybe consider generating some liquidity for your day-to-day living expenses if the dividend isn't high enough for you. I'd say that VOO is a great investment for investors seeking long-term capital appreciation, so don't sell out and be scared in the short term. Just because VOO goes down 5%, 10%, 15, 20%, which can happen in any given month, year, or even week, does not mean that you freak out, get scared, or just start panicking. It's really simple, just go on your investing app and open it up, or on their website. For me, I'm going to use Vanguard since that's my investing brokerage, and I'm going to be using it on my laptop. Most investing apps have an acronym named DRIP, short for Dividend Reinvestment Plan. DRIP, or simply reinvesting the dividend, helps investors accumulate more shares of your favorite ETF or stock, which means you can earn more dividends in the future, and you also speed up compound interest to have a higher overall return in the long run. If you crunch the numbers from the S&P 500's total returns over the last 100 years, from 1922 to 2022, you'll find that the annual S&P 500 return without dividends reinvested is only 6.34%, where the annual S&P 500 return with the dividends reinvested is 10.4%. So I really hope you reinvest that dividend to get the best possible returns in the long run. So this is going to be my own opinion, but if you're age 18 to 35 years old, then maybe anywhere from 35 to 100% of your portfolio can be allocated to VOO. If you're age 36 to 50 years old, then you can do anywhere from 50% all the way up to 100% to VOO. And if you're age 51 years old or higher, then you can do anywhere from 10% to maybe 50% or even up to 100% of your portfolio to VOO if you really want to. Anywhere from 50 to 100% allocation is mainly if you're a strictly growth investor with a higher risk tolerance and you don't care so much about volatility or if a recession is on the horizon. Anywhere from 0% to less than 30% is if you're near retirement, or if you prefer other ETFs like dividend ETFs, growth ETFs, or other broad market ETFs. And yes, you can own VOO with individual stocks paired with it as well. The best ETFs to pair with VOO if you don't want to go all in on VOO are going to be ETFs that when they pair together have a low fund overlap, ideally under a 40% fund overlap percentage. Or maybe a fund that has a different sector concentration or a completely different fund methodology altogether. So the first ETFs to pair with VOO is going to be growth ETFs. Since VOO is not a pure growth ETF, so you don't miss out on the opportunity for some amazing returns in the long run, because growth ETFs have a higher allocation to tech stocks which have led the returns of the market over the last decade. A dividend ETF or a covered call ETF is a great strategy as well, since VOO pays a low dividend compared to these ETFs, or if you want to live off of dividends way faster, then this might be a good route to take for you. Small cap ETFs are a great choice as well, since VOO invests in only large cap companies, so if you want more diversification, then adding small caps might be a wise choice for that. REITs or real estate investment trust is a good way to go as well for diversification, and these also do pay a way higher dividend than VOO. International ETFs is a smart way to go about investing with VOO, since VOO only invests in US companies, and you benefit from diversification to these international companies. Now, if you guys enjoyed this video on investing in VOO and this ultimate guide, then please give this video a like because this cute puppy did. Now, right here is going to be a video on some of the best ETFs to pair with VOO, and right here is going to be a video on some of the best ETFs not named VOO. Have a great rest of your day. continue to crush in the stock market, and take it easy. Peace.